Hello everyone, this is Professor Raghavendra Adhyabak, KLS Kokte College of Commerce, Belagavi. So, from today onwards, I am going to handle with a subject called investment management for the second semester. Okay, so the same subject is already taught by the Professor Namrata Hampiodi, and I think Madam has covered almost many concepts in the first chapter called investment environment. Okay, so in that, the Madam is already covered about the meaning and types of the investments and what are the decision making process in the investment. Okay, so these are the concept which is already madam has covered. Okay, now I am going to start with the next concept called Indian securities market. Okay, so first we will see what is the meaning of securities market. Okay, so before that we will try to understand what is the market in common sense. Okay, so in simple meaning, what is a vegetable market? Where the vegetables are bought and sold, correct? Then what is a fruit market? Where the fruits are bought and sold or traded, correct? So like that, what will be the meaning of securities market? The securities market is a market where the securities are traded or securities are bought and sold. Okay, now we understood that where the securities are bought and sold or traded, that is the securities market, correct? Now what is the meaning of securities then? What it includes? So securities includes shares, debentures, bonds, different types of bills, etc. Okay, so treasury bills means treasury bills of exchange, those bills. Okay, so including these all things, we called it as securities. Okay, so after studying this, we can easily define securities market as securities market is a market where the equity shares, preference shares, different types of bonds and other securities are bought and sold. So such a market is known as securities market. Okay, next is structure of Indian securities market. Okay, so we already studied meaning. Okay, now we'll see what is its structure in India or Indian securities market structure. Okay, so basically there are two segments or two types of Indian securities market. So first one is primary market, second one is secondary market or stock market also we called it as. Okay, so now we'll see one by one what is a primary market and what is a secondary market. Okay, so first one is primary market. So what is the meaning of primary market? So primary market is a market for a new issues or new financial claims. Hence, it is also called as new issue market. Okay, so the primary market deals with those securities which are issued to the public for the first time. Okay, for example, there is one company XYZ. So that company wanted to issue the shares to the public for the first time. Okay, then it will go to the primary market, and in the primary market they issue the shares. Okay, so when the shares or securities are issued to the public for the first time, such a market is known as primary market. Okay, so what are the different ways for the offering of the securities in the market? Okay, so they are as follows. So initial public offer, private placement, right issues and bonus issues. So by using these four methods or some other methods, we can issue the securities to the public in the primary market. Now we will see about this initial public offer, private placement, right issue and bonus issue one by one. Okay, so first one is initial public offer. It is also known as IPO. So what is IPO? So IPO is referred as offering of shares to the public for the first time. This is the most common way for the companies to raise the capital in the primary market. Okay, so these shares are issued at a predetermined price, and that price is known as offer price. Okay, for example, there is a, I already told that there is XYZ company. Okay, so that company wanted to issue its share for the first time to the public. Okay, So what it will do, it will go to the primary market, and there they will issue the shares at which price? Offer price, means the price which is already predetermined. For example, 100 rupees per share or 10 rupees per share. So like that, the price will be predetermined. Such a offering is known as initial public offer. Okay, next is right issue or rights issue. So what it means, a fresh issue of the shares by an existing company to its existing shareholders in a proportion to the number of shares already held by them is called as right issue, and where the shares are issued at a discount price. Okay, so there is already one company called ABC. Okay, so already it has some shareholders. Okay, for example, some 100 or 1000 shareholders are in that company. Okay, so again that company wanted to issue the fresh shares to the existing shareholders. Okay, so such type of issue is known as rights issue, where the shares are issued to the existing shareholders at a discounted price. Okay, next is bonus issue. So what is the bonus issue? When an issuer makes an issue of shares to its existing shareholders or employees without any consideration from them, then it is known as bonus share. Okay, so if any company issuing the shares to its employees or the shareholders without any consideration or without any charges, free of cost, such issue is known as bonus issue. Okay, next is private placement. So what is private placement? It is a sale of shares, bonds, or any other securities to pre-selected group of investors or institution rather than on the open market. So what will happen in the private placement? The companies will not go for any open market to sell to the general public, but what will do, they'll select the group of persons or they directly issue to the some institutions. Okay, so that is known as private placement. Okay, so openly they will not trade in the open market, but privately, for example, we can say that privately they will issue shares to the a group of people or anyone institutions. Okay, so then it is known as private placement. So this private placement can be of two types. One is preferential allotment and qualified institutional placement. Okay, so this is about the different ways how in the primary market the securities are issued to the public. Okay, so remaining part we will see in the next class.